Jerome Powell clears the way for the Fed to cut next month. The Fed also drops its flexible target for inflation. Core inflation in Japan remains elevated, which means a rate hike is likely from the Bank of Japan. That's coming up in our 5 Things in 5 Minutes on Monday, August the 25th. And in our deep dive interview, ANZ Senior Commodities Strategist Daniel Hynes works out whether Indonesia is about to transform aluminium supply, like it did for nickel.
What we're now seeing is some of these Indonesian companies, which are backed by Chinese developers, looking to potentially replicate what they did in nickel.
But first, in 5 and 5 with ANZ, the US Federal Reserve Chair Jerome Powell gave his final speech at Jackson Hole over the weekend. It was interpreted as clearing the way for a rate cut next month. Here's ANZ Head of G3 Economics, Brian Martin.
Encouragingly, Chair Powell did say that the baseline outlook is that tariffs are likely to have a one-off impact on prices, although that may take time to feed through because of the lagged effects of when tariffs are announced to when they actually affect prices, and indeed the staggered nature of the tariff announcements. Chair Powell did comment that the weakness in the labour market makes it unlikely that we're likely to see wages start to continuously rise in response to a one-off increase in prices. And he also acknowledged the fact that inflation expectations, particularly long-run inflation expectations, remain well anchored, is a factor that makes them confident that the outlook is one of a one-time increase in the price level from the tariffs.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was closed up 1.5% and the Nasdaq rose 1.9%. The US 10-year Treasury yield fell 7 basis points to 4.258% and the 2-year yield fell 10 basis points to 3.688%. Remember, it's quite sensitive to the outlook for Fed rates. Gold rose 1.1% to $3,418 an ounce with those lower interest rates. West Texas oil futures up 0.2% at $63.66 US a barrel. The US dollar index fell 1.1% with those lower interest rates, which meant the Aussie dollar rose 1.1% to 64.90 US cents. And the Kiwi rose 0.9% to 58.68 US cents. Number 2, Brian also points to a change in the Fed's inflation target.
Our view is that they will reduce rates by 25 basis points in September and follow that with another 25 basis point rate cut in December. As far as the Monetary Policy Framework Review is concerned, the Fed has dropped the need for a make-up of inflation in its policy, i.e. the flexible average inflation targeting has been dropped. For a prolonged period in the aftermath of the GFC, inflation was below the 2% target that the FOMC introduced in 2012. That's not the case now. Inflation is above that, so it's no longer the case that the FOMC needs to have a flexible target around that.
Number 3, Japan's core inflation rate was steady in July at 3.4%, but that's above the Bank of Japan's 2% target. Here's ANZ FX strategist Felix Ryan.
The key thing for the Bank of Japan will be on the services side of things, and services inflation was at 1.5% year-over-year, so that again was unchanged from June. We are seeing some evidence there of, businesses being a bit more willing to pass on costs. That's certainly been coming through in some of the survey data from Japan at the moment as well. Stronger wages as well flowing through into some of the inflation in those labour-intensive services. So overall, definitely some evidence there that the services side of things, the core aspects of inflation, is still going pretty firm really for Japan.
Number 4, Felix sees the Bank of Japan, or the BOJ, moving ahead to raise rates.
We still see one more hike this year from the Bank of Japan in October. That's 25 basis points. Market pricing at the moment only has that at about 50% chance at the moment, but we still do see that as occurring. Outside of inflation, there is still, of course, those risks around growth from US tariff policy and global financial market volatility. So the BOJ will still be quite cautious, but certainly the data here today is encouraging of more policy normalization going forward.
Number 5, core inflation in Malaysia was also unchanged in July, reports ANZ economist Arindam Chakraborty.
With domestic demand holding steady and global commodity prices easing, inflation is expected to stay mild in the near to medium term, also helped by favorable base effects. Now in July, Bank Negara Malaysia cut its policy rate by 25 basis points as a preemptive move to support growth. But even with inflation staying subdued, we don't expect another rate cut unless there's a significant slowdown in economic activity.
Arindam Chakraborty there. Now, in today's deep dive interview, ANZ Senior Commodities Strategist looks at what Indonesia is doing to the aluminium market and tries to work out whether it's about to do a nickel on aluminium.
If people have been following the metals industry closely in recent times, Indonesia has certainly caused a bit of upheaval in the nickel market with essentially this new technology which enabled them to basically start feeding their low-grade resource of nickel into the burgeoning sort of electric vehicle battery sector. And they've now come to dominate world supply, but with it has come this collapse in prices due to the surge in output that Indonesia has created. What we're now seeing is some of these Indonesian companies, which are backed by Chinese developers, looking to potentially replicate what they did in nickel in aluminium and try and essentially, become the dominant global producer of the metal and obviously benefit from the spoils.
Yeah. How did they manage to produce so much nickel? What was their trick, if you like, to turn their low-grade nickel into something they could export?
Yeah, well, essentially it was utilising current sort of or existing technologies to produce essentially an intermediate product which hadn't been done before. But, the ability, I think, for the market to utilise this low-grade supply, which had previously been considered too expensive and too hard, really, to feed into the battery sector, enabled them to really become that dominant producer, it certainly caught a lot in the market out, and I think that is why we're seeing prices, at least in the nickel market, remain relatively low.
So that was a transformation in the global nickel market created by Indonesia increasing supply. Are they about to do it in aluminium as well?
Yeah, well, certainly, the government of Indonesia is trying to incentivise, that investment. Firstly, by banning the export of the raw material used to create aluminium metal, which is bauxite ore, and that is thus forcing a lot of producers, I suppose, to look at developing refineries and smelters within Indonesia. Now, as I said, China helped the nickel industry evolve to become that dominant producer, and I think a lot of those companies now see the potential to do the same in aluminium, and that has resulted in a huge pipeline of projects. In fact, if all of these projects came to fruition, we would potentially see a 5-fold increase in output from Indonesia.
So who's financing this, and is there enough reserves of bauxite to do a nickel on the aluminium market?
Yeah, and I think this is the issue, or at least the difference, I suppose, between nickel and bauxite aluminium. Certainly, in nickel's case, the reserves, while low grade, were quite extensive. But in the case of bauxite, their resources, while still relatively large, are very much low grade, but certainly do pale into comparison with some of the other major producers. So we're certainly not looking at, I suppose, opening up a part of the market which hadn't been available to nickel aluminium producers in the past. And look, it is being driven by Chinese developers. Certainly, China is pretty hungry for aluminium. It certainly has been looking to diversify its source of ore, and Indonesia fits that bill. And so we're seeing a huge amount of investment come from companies similar to the ones which have been involved in the nickel one into the aluminium market now.
Daniel Hynes there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Monday, August the 25th. Catch you tomorrow with part 2 of our deep dive interview with Daniel to work out China's role in this big surge in aluminium. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.